Good morning, everybody. It's Brian. Hope you're doing well today. It's Thursday, the 28th, 27th, 27th of August, and just going to do a quick run through on the numbers here. Let us see what we should be looking at. Talk about some key levels in the future side of things, and then get on out of here and let you guys wait for your trading days to begin. I'm a little early. Have been the last couple of days. I don't know why. It's damn. So let's go ahead and jump into it. I'll keep these kind of on point, straight to the topics, and go from there. I guess the first thing is I just posted here on Facebook the link to access or to register for the event that I'm speaking at next week. So there's an event coming up Tuesday, Wednesday, Thursday of next week. There's 20 something presenters over the 3-day period. A lot of them I personally know. Good guys, good trading methods. I'll be speaking there on Tuesday afternoon. Everyone's just sharing kind of what they do and different ways to look at the market. I want to just remind everyone there is no right way to do it. There is no correct method of trading the market. It's there's a lot of ways to come at this thing. There's as I say all the time, your trading plan it should be as individual as you are. Take some key ideas and then formulate them into a plan that makes sense for you and your risk tolerance and the time frames that you want to trade on, the instruments that you want to trade on, the time of day you want to trade, and make it your own, right? But events like this are great events because you get to hear from a lot of different people. You hear different perspectives. You see different ways of looking at the market. You see different markets that are traded, and then you can take bits and pieces of that, and if you don't have a plan, put it in. The danger of events like this is that shiny object syndrome that so many traders struggle from, because everyone's going to present something that shows everything that they do in the absolute best light, makes it seem as easy as possible, and makes you want to be part of that. I will caution everyone that goes to those events, take it for what it is. It's a great way to get ideas. Don't get sidetracked. If you've got a plan, you're working on a plan, you're implementing a plan, stick with your damn plan. Don't flip-flop all the time. That's what screws it up. That's what screws up your plan. That's what screws up your equity curve. That's what screws everything up, all right? Don't flip-flop. Find something and stick to it. Once you're really, really good at it, then maybe look at adding some things or having a separate plan to do something else. But don't keep flip-flopping. So I will say these events, while they're awesome and I love them, they can be dangerous to people that just keep jumping from system to system to system and plan to plan to plan, and then wonder why nothing works. It doesn't work because you keep flipping and flipping and flipping. So anyway, enough about that. Cool event coming up. Click the button in Facebook to register. I just sent out an email about it as well, so you may have gotten that. You click the link in there and get registered. You get a pretty cool little ebook with some ideas about the strategies already ahead of the event, and then go to the event and learn some cool things. All right. With that said, what's happening in the markets today? We've got Mr. Powell speaking. There's been a lot of build up to this. Who knows? Maybe nothing happens from it. Maybe the market just keeps trucking along on that trajectory that it's been on. We'll see. Again, don't try to front run it because no one knows what's going to happen. No one knows how the overall market is going to react or digest what is said during his initial speech and follow up to Q&A following that. Just let the market do what the market's going to do, and then implement your plan based on the current trend. All right. So anyway, that's the news. Over here, we've got news coming up. So 7:30 Central Time, 8:30 Eastern. We've got the unemployment claims and preliminary GDP, and then at 8 Eastern. 8:10 Central Time. 9:10 Eastern, so still ahead of when the regular session begins. Mr. Powell will start speaking, and then at the end of his canned speech, there will be Q&A, and that's where things typically get interesting. We'll talk about the futures market, the index, the S&P in just a minute. But before that, let's hop over and look at what's going on in Forex land. There's a few items that I think would be interesting. I will say, just as a reminder, high impact news. Potentially. No one knows, what's really going to happen, but it's potentially high impact news on the USD. And the USD high impact news can trickle over into all markets. So, it only gives from the time the US Forex session begins until news, it gives an hour, right? US Forex session begins at 8 a.m. US Eastern Time. Mr. Powell is speaking at 9:10 US Eastern Time. So it gives about an hour for potential trades there, or just wait, okay? You don't have to do anything right away. Just wait. Wait a minute. Let him do his thing. Let the markets do what they're going to do. See how the market digests what's said. Then take action, all right? And take action based on what you're seeing on the currency strength meter, right? Just look at which currencies following his presentation and Q&A, which currencies are moving to strength, which ones are moving to weakness. Pair those together, and bing, bang, boom, you've got a potential trading opportunity, right? It's pretty darn simple. It doesn't have to be overthought. The one thing you do want to consider once you find out which currencies are moving is, you might have a quick look over and just see where they are in their current ranges. If they're, exceeding what their typical range is, you might be looking for reversals. If they're, still have some quote, gas in the tank, as I always say, there's still some opportunity there, then trade it in the direction that it's currently trending, right? US CAD is interesting. It's only moved 30 pips for the day. Its average is, into that high 70s range. So definitely a lot of opportunity on the US CAD from where it is right now to where it typically is. So there's definitely a lot of range opportunity left there. Pound CAD, a little bit. It's moved 75 pips on an average of 125, 120. So, definitely some opportunity there. I think Pound CAD or US CAD probably has a better opportunity. It's moved less than 50% of its typical range. But again, wait until news, right? Euro yen, it's typically pretty volatile. It's moved half of its range as well. Pound yen, same. It's moved about half of its range. So there's some opportunity out there. Euro CAD, it's moved 70 pips on an average of 100. There's definitely some opportunity out there. We just need to wait until that news occurs and then see, again, what the market thinks of what's said, especially during the Q&A, because I think that's where you get the real tidbits of what's actually going on and what might be happening. But again, even with that, don't trade during the Q&A. Let everything happen. Wait for the market to normalize and then take an action. All right. Same over here on the future side of things. Let me just pull this up over here. This one. On the future side of things over here, we're pushing a new. What the heck? We're pushing to new highs on the S&P. Yesterday coming into this, we're sitting in the middle of my screen. We're sitting right here. I said personally, the bias is long. I was looking at shorts off of this. As I said, always be prepared to be wrong. We talked in the morning about 3450 being a potential breakout area up there. It did. It broke it and it just kept on. So potential shorts were blown out of the water. But you keep, you have to be prepared for that. To be prepared to be wrong, and it kept moving. Now here we are again at a kind of a decision point. These are new. This is everything right now. Yeah, on the way up is new. It's uncharted territory. We don't know where it's going to stop, where it's going to, when it's going to reverse. I know there's a lot of sentiment, public sentiment around there needing to be, or quote, should be a pullback. I will just keep saying, as I have said numerous times before, as Mr. Keene so eloquently pointed out many years ago, that the markets can be irrational for much longer than we can be solvent. And that's very true. Folks love to try to call tops and try to call bottoms. I will say that all the folks that have been calling tops over the last month are very, very, very quiet right now. I saw Twitter, I don't know, a couple weeks ago was blowing up around people wanting to go short off of on the NASDAQ at 11,250. 11,250. How far back is that? I can even get it over here. Anyway, I kept seeing posts. I'm going atomic short. I'm risking it all. Blah 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 on 11,250. That was how'd that work out? Anyway, nothing wrong with being contrarian. As I've said before, there's certainly nothing wrong with being a contrarian trader and looking at opportunities. If you using my train analogy, I don't know why I'm on that train analogy so much lately, but using that train analogy, if a train's coming in and it has a history of stopping at a certain point, meaning you've got support and resistance, meaning it comes to this resistance area and it pulls back. If it's got a history of pulling back off of that a couple of times, there's you've got decent odds that it might stop there again, but it doesn't mean it will. Maybe the schedule that it's on now just blows through that station and keeps going, right? So you've got to be prepared to be wrong. Looking at it kind of like Newton's law, forces tend to, how does that work? What's that law? Object in motion tends to stay in motion until acted on by an outside force. Again, it's kind of this, right? The S&P is on a upward trajectory. It's moving up. It's going long. That's the overall market bias is long. There's going to be pullbacks intraday on that, and we can be strategic around when we play those, but we have to be prepared to be wrong. Just like if we're trading with the trend, we still have to be prepared to be wrong as well. But I feel like it's even more so when you're trying to call these tops and bottoms. Anyway, I'm getting off on a tangent. The overall bias on the 4 hours long, bias in the 30 minutes long as well. And this tells us that we would be looking for long trading opportunities. Now, here's the interesting part. If you look at the 30-minute and just look at the moving averages, because this is flattened out like it has, it won't take much of a move to the shorter side for the short-term bias to cross under the longer-term bias. So depending on what happens around this, is why I want it just to be patient and let the news occur and see what actually happens here. If something happens around that speech, the market reacts negatively to whatever Mr. Powell's saying and during the Q&A, we could see a pullback. And if it does, we have to be patient and see how deep is that pullback, and what levels are we coming down to or breaking, and then B, we have to determine do we want to step in to that trade in the direction of the trend, or do we just simply hands off, step back and let the market do its thing, and then come back the next day and trade based on something that's quantifiable with the directionality of the market. For right now, the biases are both long. If these cross, we'll have a mixed bias, and that would tell us don't trade. But for right now, just assuming everything goes to plan and the status quo is maintained, we would be looking for long opportunities. What does that look like? Well, it could be a couple of things. We could look for pullbacks, back down to 3450 area. We saw a lot of resistance here at 3450. Finally broke through. We could look for a pullback to 3450 to see if we get support down here. Or we could be watching 3480 for a potential breakout. If it breaks above and closes above 3480, we could certainly see 3500 in our very near future. But again, no one knows what's going to happen, and no one has that crystal ball that accurately tells them where price is going at any period of time. Right? It's a crapshoot. 50-50 odds. It's not even a crapshoot. You got better odds in craps. Anyway, so we're watching this, and the bias is long, so that tells us to look for long opportunities. Just wait and see if these end up crossing, if something really major happens following that Q&A section of Mr. Powell's speech. You might just want to say, hey, hands off, I've got a cross that mixes my bias and I don't want to trade, right? But for right now, bias is still long. Over in crude, we've got 4 hours on a long bias, 30-minute is still technically on a long bias here. We've been struggling around 43. We talked about that number yesterday, that it was a big point of resistance. We've broken through it and it's now support here for us. So 43 is definitely seeing some support. We've come down to it actually this morning and starting to repel off of that 43 area. Now, if this stays down here below 43.20, it's very possible that it does. These will cross, and we won't. We'll have a mixed bias into the U.S. session. So we'll see how that goes. Now, obviously, again, no one has a crystal ball. Just have to wait and trade things that are quantifiable. Everything is about having a quantifiable reason to do what we're doing. Anything other than that becomes trading from emotion or trading from your gut, which leads to a whole litany of other issues down the road. The top one being inconsistency, because we're never going to, if we trade emotionally, there's no consistency with our emotions, so we can never be consistent in the application of that. That's why we need quantifiable things to have us enter trades on. So for right now, it is technically a long bias. However, we've still got an hour and a half before the regular trading hours begin, and that's the time I like to trade. I like to trade during regular trading hours. So we'll watch this. If this crosses by the time that we get ready to start looking at our trading opportunities, then we don't trade, right? But for right now, bias is still long. What does that look like for potential trade ideas? Well, again, if the bias continues to stay as a long bias, we'd look for buy opportunities off of 43 down here. If you're looking to buy breakouts, so this is a bounce trade. If you're looking at breakouts, we can certainly look at breakouts above 34.50. So if it hits 34.50 and breaks through 43.50 and breaks through, that would be the opportunity to buy on oil over here. But again, just quantifiable. If this stays down here, this will cross, and that'll tell us to stay out of the market. Gold is still in a short bias. Yesterday I talked about counter trend trading on gold. This one actually did move pretty darn well. We can see that came down to the 1905, 1908 was its low yesterday. Yeah, and then just pushed on back up. We are still in a short bias though. The 4 hour is short, and it's mixed now. 4 hours short, the 30-minute is long, so that's got a mixed bias, telling us at this point to sit on our hands. If you are still looking, to trade gold, I'm a bit of a gold bug. I would still like to look at long gold. So we could be looking at breaks above 1960 if you're looking for a breakout. If you're looking at pullbacks, 1940, 1935 for pullbacks, and then see if it goes long from there. So that's those are the trading ideas. Just remember, trade based on the bias. If the biases are mixed, don't do anything. You've got to have a quantifiable reason for doing what you're doing. Even on counter trend trades, there should be a really solid reason for why you're looking at that level or that area to go counter to the current trend. So safest way though, I feel like safest way is to trade with that trend and with that current bias. So that's it. I'm gonna leave it here. You guys have a great day. We'll talk to you later. Bye.